Hello, everyone. This is Richard Amoydo, co-founder of Investor Next Door Club. Thank you for hopping on our masterclass tonight. We will be talking about crowdfunding as well as investment clubs and kind of giving you a high-level understanding of the pros. And there's some cons depending on your strategy or what your interest or appetite is. But those of you that are hopping on for the first time, welcome. Those of you that are returning club members, good to see you. Happy to be on the journey with you. The chat will be open. So you're welcome at any point in time to drop in a comment, and I will get to those at the end because I will not see those as I'm going through the slide deck and talking as well. But don't hesitate to ask any question. Happy to address all of those concerns or any other experience that you might have had with something else. But what we do at Investor Next Door Club is real simple, is we help you gain awareness, get knowledge, get experience, and then move you on through your financial journey as it may pertain with your personal finances as well as inside of real estate investing. And we have a whole host of people at different experience levels from none to a lot that are plugged in because they either want to grow and learn or they just want to stay networked and connected and continue building what they've already had some experience with. But tonight we're going to talk about crowdfunding. We have a crowdfund that's registered with the SEC. We're going to talk about investment clubs, which I've done some smaller ones in the past with my previous funds that we have had over the years. But I'm going to dive in so you guys have an understanding and just listen, when you have better knowledge, you can ask better questions. And, it's hard to become an expert at something until you've actually gotten some experience. But you need to have a little bit of confidence in the information, in the strategy, or just knowing what questions to actually ask. And that's probably the biggest thing that happens for people, but I'm going to dive in here real quick. Let's go here. Okay, my screen should be up. Crowdfunding and investment clubs, how everyday investors are accessing the deals that used to be reserved only for the wealthy. Most people, about 87% of the population, are told if you want to invest, you're going to have to go to Wall Street. And most wealthy people, though they may have money with Wall Street, they use it like a piggy bank. Because when a private deal comes along, they go ahead and liquidate and they put in the private deal because they know it pays a lot more. So if you've never been involved in any kind of private investing whatsoever, then just know there's a reason for that. And there's laws and rules in place that keep you from doing certain things. But for decades, best deals were always reserved for a wealthy few. But that has changed. With global crowdfunding exceeding over 20 billion, it has been rapidly growing in the US. 70% of crowdfunding capital comes from retail investors. And you may hear that term, you might be familiar with it, but retail simply just means non-accredited. It means that you're under the threshold of what the government says is accreditation to be able to invest in any kind of deals. But 70% of the money that comes into crowdfunding is going to come from retail investors, those with $1 million worth. But there is 100-year plus history with having investment clubs. Now, when it comes to crowdfunding, it's a little bit different, but we're going to talk about some of those things. We're going to walk you through, talk about the old rules, talk a little bit about crowdfunding, talk about investment clubs, a side-by-side comparison so you have a kind of a good idea of what's the difference between the two. And then really just kind of what your next step is. How do you evaluate any opportunity with confidence? So the old rules, why most people are locked out up until recently. Recently means in recent years, because even though crowdfunding's been around for over a decade, it didn't necessarily make it into every type of business type or business category. It's taken time to evolve and grow into those things. But the reason why it was so important for crowdfunding was because to get into a private deal, you had to be an accredited investor, which means you have at least as an individual $1,000 a year annual income for at least 2 years, and with the belief that it's going to continue. Or you're a married couple that's making $300,000 a year, or you have a $1 million net worth that does not include your primary residence. So you can't count the equity in your primary home where you live, right? So it's got to be through 401k or other things that you may have, or just liquid cash, which is only about 13% of the population. And that's a really small percentage of people, where only 1 in 8 households actually qualify as a accredited investor. These deals that are available to accredited investors, they do yield higher returns than the stock market as a whole. That's why they park their money there and then they move it into a private deal where they can leave it there for a few years or longer, and they know they're going to get higher returns, and it's usually going to be backed by some kind of asset. So it's a win-win. The stock market can go to zero. Real estate doesn't go to zero, right? There's always a value associated with the underlying asset, especially when it's income producing. But the door kind of got cracked open. We'll go all the way back to 1908. First investment club was formed. Now, a good reason why you've not heard about investment clubs is because usually it's something that only high net worth people do, but 99% of the population doesn't realize is that it really actually is open to anyone. There's certain rules that have to be followed so it doesn't violate the laws and regulations that are in place. One of the things that came in 2012 with the Jobs Act was a way to soften and open up a broader audience to be able to invest in all different types of things, investing in startups before they were public, investing in movies or other artists, or investing in a new product line that a company was bringing to market. And then over past several years, it's kind of morphed its way into real estate, which has really been really closed door. And only a very small amount of people, of even high net worth people, participate in private real estate investing opportunities. But in 2016, we got what's known as a Reg CF. And that's where anyone that's 18 years or older could start to privately invest in offerings that companies went through the process like we did to create that on-ramp for anyone to come in, regardless of their income bracket, regardless of their experience or their net worth. None of it mattered as long as that company had a Reg CF. And that's just one of the forms of crowdfunding, but it's a stringent process to go through to make it available. So there's really kind of like the best of both worlds when you start talking about investment clubs, or you start talking about traditional or more modern crowdfunding, because it just lowers the bar for people to be able to come in and start playing in the game, which is the number one thing. Is we want people in the game. Now, crowdfunding is going to carry usually low minimums because it's serving a broad audience. It's a lot of people coming in offering small amounts of money. Of course, people can put in more, but the important part is what's the lowest threshold we can have. And now ours is at 500 now because it's real estate and it's capital intense. When you're looking at someone that might be doing a startup for a tech or some kind of project, then they can have lower bars on that kind of stuff. But the great thing is that when it comes to crowdfunding, it's open to everyone, non-accredited investors and accredited investors, and the law supports it and backs it. Here's one of the things that kind of gets in the way for people with any kind of private investing, which is why a lot of people don't. We find that there's two reasons why people don't invest privately. One, they don't have enough knowledge, so they're not confident. Then the other is they don't have enough disposable income that they don't need to live on. Because when you invest in something private, it's not like the stock market. You can go buy Microsoft tomorrow and you can sell it in 2 weeks. You could actually sell it the next day if you wanted to. That's the retail market. That's the public markets, right? But with a private, you're going to park it there and you're going to leave it there to grow for a period of years. Now, some people say, well, that creates more risk. In my personal opinion, it doesn't. It gives it a chance to actually grow, produce income, and appreciate. And the thing that I like that a lot of funds don't do is you got to have diversification. If you want to minimize risk, then you got to spread that risk out across a number of different types of assets that would support the returns to not drop below a certain point. Now, there's no guarantees in anything when it comes to investing. And if you've ever heard someone say, hey, there's a guarantee, you should walk the other way, because the only guarantees you're going to find is CDs and treasury bills. Okay. In the private market, in the public markets, there's no one that can give a guarantee. It's completely illegal. Plenty of people have gone to jail for that. So, but when it comes to investment clubs, this is a small group of people, less than 100 people. And some people say, well, that's not, that sounds like a big group. Well, when you look at crowd funds, they get thousands of people, tens of thousands of people in a crowd fund. But with this, it's a small group of people. It's got a shared structure, the way things have to function and operate, so it doesn't violate any securities laws. And what this allows is this group of people to have real ownership, and they have a real voice. When you go into a crowd fund, you're able to make your best decision based on the information and based on what you know about the operator and the strategy, but you're not going to have voting rights. And that's typical in a lot of different funds. But with an investment club, it does kind of shift. It's a hybrid of what you're able to contribute and participate in, and it's a great way to learn also. But some of the key traits are this: members are co-owners, they're not customers, they're not passive, they're not 100% passive. You're still going to pool capital together, and typically investment clubs are going to go after bigger deals. One, because they're raising more money. When it comes to investment clubs also is you got the benefit of education because you're kind of on the sidelines, but you're also in the game. You're watching it. You've got a front row seat to everything. And the decisions happen together based upon the aligned set of guidelines of how that club said it was going to operate. So you got these aligned interest, and everyone has skin in the game. Now, how it works is, a member's going to join a club. Like, think of anything. You join a country club, you join a pickleball club, a racquetball club, whatever it might be, but you join a club, right? So you're a member. And then part of that membership is you're having to put capital in at whatever threshold they set to enter into that club, because there is a minimum. Then you've got group reviews for opportunities. Now, typically, that's going to be based upon, hey, this club is going to participate in these types of investments, so you shouldn't enter the club unless those types of investments are aligned with what you would be comfortable with, or you should be in a different club. It's not right or wrong. It's just whatever your appetite is, whatever your desires are. So you kind of pick it on the front end, and then once you're in, you're kind of moving with the flow on things. But profits are shared by ownership, and it's a more direct form of ownership than being a limited partner of fund. And it doesn't matter if it's with our crowd fund or any other type of fund, or even, an index fund. You don't have the same voting rights in those things, but because you're passive, right? You're really just not even in the sidelines. You're on the bleachers, right? You're just kind of watching the game happen. With an investment club, you're actually on the court with the operators themselves. Now, it's the same goal. They're just different vehicles. So when you look at who can join, well, crowdfunding is 18 years or older. That's pretty much about the extent of it. Investment clubs, again, states may mandate some different ages on this, which is why we didn't just put 18 plus, but just know that it's a pretty low. Most states are going to be 18 or higher. The minimums are going to range, you see crowdfunding, that's 100, but most of the time they're going to have a very low minimum where anyone can enter in and just get their toe in the water if they wanted to. And then when it comes to investment clubs, that minimum is going to be set, but it's typically a higher amount that's going to run. It could be $5, 10, 15, $20,000 to be in one of those clubs. Now, that's not an annual fee. That's just your ability to come in and purchase, a club unit, so to speak. Your role in crowdfunding is you're a passive investor. In an investment club, you're a co-owner. Now, that doesn't mean you're having to lock up late at night or, sweep and mop the floors, but you have ownership benefits at a different level. Decisions when it comes to crowdfunding, they're made by the sponsor. They're made by the operation, the asset management team. When it comes to an investment club, it's a voting system, right? There's more member participation inside of that, especially when it's a big, when it's a major move that's going to affect one or all inside of that decision. When it comes to liquidity, they're really both about the same, because they're going to be in there probably for anywhere between 3, 5, 7 years, depending on how it's set up. Which, just so you know, when a high net worth person invests inside of a private equity fund, most of the time they know they're putting their money in for 7 to 10 years. It's money they don't need to live on. So anytime you're making a private investment, I don't care if you're buying the asset for yourself, or you're going into an investment club, or you're going into a crowd fund, or any kind of fund structure whatsoever, that needs to be money that you do not need to live. So you do need to make sure you have that margin, or you have money that you have in a self-directed IRA, or it's money that may be rolling over for a 401k or whatever it might be. It needs to be money you do not need to live on, because this is your seed that you're planting for a future harvest down the road. Now, this is best for really when it comes to crowdfunding. You want less exposure because you're a limited partner. You don't want the operational responsibilities or anything where you have to make any other decisions. It's like, I want to put my money in. That's all I want to do. Completely fine. When it comes to investment club, it's not that there's day-to-day stuff or weekly stuff, but there is going to be probably a monthly meeting. There's probably going to be some decisions that need to be voted on, right? There's going to be some things that you're going to have a little bit more involvement, but that would be expected for potentially a higher return and more direct ownership access. So that's a comparison on those two things. Neither's not necessarily better because they solve different problems depending on where someone's starting or what they ultimately want to accomplish. It's just a function of what works for you, and is a crowdfunding option better for you or is an investment club option better for you? But neither one necessarily is better more than the other. Now, when it comes to returns, it requires real diligence. So you got to look at things. One, you got to look at your, illiquidity factor, which is what I talked about. This is money you don't need to live on. So you got to plan accordingly. Then you look at the sponsor risk. Who's operating this? What's their track record? It needs to be just have an idea that this is the strategy. This is how it makes money, and understand that. But you also need to understand that with any investment of any kind, there can be capital loss. And I watch people all the time go inside of deals where they were promised, guaranteed, whatever it might be, and they end up losing their money and they don't understand why. It's like, well, that was really an illegal marketing technique. It was fraud to tell you that so you would actually invest. Now, they might have believed that they were not going to lose money. The fact of the matter is, you can't control everything. You can make your best decisions based on the information and the strategy, but at the end of the day, every investment firm, every high net worth person, every VC, whatever it is, every private equity, they know they spread their risk around multiple investments because they know there's always an unforeseen that can possibly happen that's out of all people's controls. It's out of the operator's controls. It's out of the investor's controls. It's just part of it. So I don't mean to be a Debbie Downer on that, but just know that anyone that tells you you're not going to lose your money, you can't lose your money, there's a guarantee of making this return or a promise of this. I harp this so much because I watch a lot of people make a lot of bad decisions and they lose their seed when they could have put it in something that was a little bit more conservative. And yeah, maybe it didn't get the same hyped returns that someone else talked about, but bottom line, they still would have had their seed and they would have had a gain. But they took a gamble on the wrong information. So, and just so you know, when it comes to strategy, one deal isn't a strategy. Diversification is your friend, especially when you're not an expert. So when you go into a diversified fund, that's part of a strategy that the fund has, but you should also have different allocations in other types of investments. We've had people come to us that say, well, we just got an inheritance and I'd like to put it all here. And I will tell them no. I'd want them to spread that out because that is something, a responsibility that they should be doing as a good steward to make sure, no matter how good they think a deal is, they should have a certain allocation that fits inside of their investment plan for long term, not short term. You don't go plant an acorn in the ground and go check it tomorrow to see if it's sprouted. Put a live oak tree in the ground, it takes years to develop. Just like with any good investment. Warren Buffett says it best. I love quoting Warren, but he's like, I have the perfect, best get rich method on the planet, but no one wants to follow it. And they say, well, why? It's like, because it's called get rich slow. No one wants to go slow. And we've watched the people that try to grow and invest way too fast. And because of things that were unforeseen or just because they were taking risks that they shouldn't have been taken, it sets them back 5 to 10 years. So having a proper allocation is wise, and looking for vehicles that offer you diversification is also very wise on your part as well. So with Investor Next Door Club, everyone's invited. You get a lot of private off-market things that are not marketed on, the MLS or Crexy or all these different things because we have a network of relationships, and there's always an owner that has something that needs to be solved, right? Whether they got something that they didn't intend on having, whether they need to sell quick because they have a different kind of emergency. There's a number of reasons why someone might sell at a discount and sell privately. Sometimes it's just to save on some of the expenses and fees that go with selling through the normal traditional channels, but all of it is still just as legitimate as anything else because it's all going to get closed at a title company. It's all going to get recorded as real property. So it doesn't really matter, but we focus on helping others get access to what we get access to on a regular basis. And then when it comes to, community, well, people get to invest together, they get to learn together, they get to reinvest together. There's a number of things. When you have community, you learn faster and you grow faster, and that has been proven over and over again. And Mary and I, my wife, we have been a part of a lot of great communities over the decades, and those have been the times where I have excelled, where we have excelled the fastest and had the best experience along the way, because it's not just about the destination. Yes, everybody wants to have a great payday, but you don't want to have to suffer and grind all the way to the process. You want to be able to enjoy the process, and because it's not just about the destination. And then the education piece is, listen, the more you learn in a group dynamic, the more confident you're going to be, the more you're going to be able to go to people and say, what's your experience with this? So that's a very different set of knowledge that you gain versus just going onto YouTube and typing in how to. We have an abundance of information available at our fingertips. What we don't have is a lot of good, high quality information that's organized with a group of people that's actually really trying to get you to that next level. And that's where all the free information sources fall short. But this is why high net worth people participate in clubs, because they know that it becomes a trusted environment and they're going to get things done quicker because everyone's busy and no one wants to be bogged down with all the minutia and all the other BS that happens with all these other things that are happening. So we just put it all together under one roof, where there's access, there's community, and there's education. And of course, then from that, there's opportunity. But the wall is down and you get to walk through it. So I would encourage you that if you've not already dropped some things in the chat, drop some questions in there. If you want to come on audio, I'm happy to answer those. You can go visit us at investornextdoorclub.com. We do live events in person. We do virtual events. We post those on a regular basis. I would just encourage you to join the conversation, because most people, they're trying to figure out, how am I going to have enough in retirement? There's a lot of people that are approaching retirement that are thinking, oh my gosh, I'm going to outlive my money. And the fact of the matter is that retirement accounts are really dwindling in a lot of ways, because there's so many people that don't have enough saved up, and it's really becoming an epidemic, in my personal opinion. And some of you are on here and you're in your 20s, you're in your 30s, and it's like, you're not really thinking about retirement. You're just thinking, well, how am I going to make $1 million? Well, that's fine. But understand, you've got to start learning the ability to compound small bits of money, and that's going to allow you to compound bigger bits of money down the road. You can go whale hunting, and a lot of people die whale hunting. They starve because they could have been catching some small fish and eating along the way and staying healthy and fit and all those good things. And then every now and again, they get a whale. But I watched a lot of people that chase down the big windfall, and the big windfall doesn't come. And they've squandered decades that they could have been actually eating and planting seeds that's going to grow and compound over time. But let me go ahead and check real quick what we've got happening in the chat, if there's anything. Let's see. Talk about the affiliate program, become an investor in the real estate fund. So we do have a referral program that's associated with our Investor Next Door club membership. And those are people that help us grow the community. They help us spread the word. And through that process, they get referral fees for that. And it just makes it a win-win. There's a lot of gurus that are out there that will talk about, some $30,000 program, and there's only one person that wins in that transaction. What we wanted to do at Investor Next Door Club is, if we're going to build a community, let's have the whole community win together, because if they're going to build it, they might as well be rewarded for it every single month for doing so. So that's why we structured it that way. When it comes to the real estate, the crowd fund that we have in place, it was designed to where that referral program would help people get themselves out of debt quicker. And then they would have that extra surplus. They would have that seed that they need to plant. And they could do that cycle over and over again. So those of you that want more information regarding the club membership, get back to the person that shared this with you. And then also, if you're like, hey, I need to make some extra money too, and I want to figure out how do I snowball this so I can get myself out of debt, learn some great financial practices while I'm learning investment practices, but I'm also increasing my income that I can start to deploy in things that will grow, then I would just recommend you get back to the person that shared this with you. We do these free master classes every Tuesday night, and you can invite anyone you want on here. And we're happy to help you guys get to that next level or that next step. But I appreciate you being on tonight. Is there anything else anybody wants to drop inside of the chat before we close out for tonight? I'll just give a couple of two quick comments real quick. When we started thinking about Investor Next Door Club, it was really designed to help that person that has always had a desire to get started, but they couldn't get past the first barrier, which was the 20, 30K programs. And so I didn't like that. And I've participated in those programs over the decades. I've had 2 real estate funds that was done over 45 with. I say that not to brag, but just so you know that there's this is what we've been doing for a little while here. And, we've had a lot of fun doing it. Here's what I didn't have fun doing is people would say, can you teach me? And I would say, no, I didn't have the bandwidth or the time. There wasn't the technology that we have available at our fingertips today. So there was that piece. But the other part, they would say, well, then can I invest with you? And I would say, no, because you're not accredited. And I got tired of telling people no all the time. So we were able to make high net worth people a lot more money, and I couldn't help other people. That's why we formed the club. That's why I went through the process to have a crowd fund. And so this is a complete ecosystem. This isn't just some one-trick pony. This is designed for everyday people to get into the game and start at a place that is safe and a place that they can build their confidence along the way before they ever have to take any real risk. Jeff's got a question. Let's see. I'm going to go Arlen here. Thank you, Rich, for sharing. Okay, great. Talk about the deals that you're seeing in the current markets, things you're looking at as for investment. So a lot of things that we're seeing right now has to do with, in the commercial space, since over 50% of all commercial loans were done with some kind of adjustable rate mortgage. And if you remember what happened in 2008, if you were an adult in that time frame, it was a very hard time, and that was really affecting the residential markets. And it was for years, it took a while to clean up. Well, we're kind of having the same thing transpire with the commercial markets, which we focus on commercial. Doesn't matter if it's apartments, storage, flex space, anything that's commercial that's not residential. About 50% of those operators, they gambled, and they did that floating adjustable rate mortgage. And then a few years ago, that interest rate shot up to 7 and 8%, even higher. And it doubled the cost of their mortgages. And so the banks have been helping them extend and pretend for a number of years, and that's kind of coming to an end. So what we're seeing right now is we have motivated banks and we have motivated sellers that are wanting to or need to get out of these properties, and they have to sell them at a discount. And they're going to be selling for construction cost or lower than construction cost. And we've got this window over the next couple, 2-3 years. But it's not just about that window, because real estate has been with us for a very long time. There's always going to be a need for real estate. People need a place to live. They need a place to work. And the other thing is that real estate historically doubles in value every 15 years. Sometimes it's 7 years. Sometimes it's 8 years. But regardless, we know that real estate is going to continue to increase. And so we believe that the more people that are around the campfire of this community, then the more we're going to be able to help people participate in those deals that they would not normally be invited to for a number of reasons. Some of those reasons we covered tonight. So I appreciate you guys being on. There's so much more to obviously learn. This is kind of like getting a drink from a fire hydrant, but I want you to know that our community is here to support you on that journey, and in a way that just about anyone with desire could start. So if there's anything we said tonight that piqued your interest, that's got you curious, get back with the person that introduced you to this, and we'd be happy to answer further questions for you and see what we can do. But stay on top of what we're doing. Follow us on social media, and you'll see all of the events and activities that we're doing. And we look forward to working with you guys. Thank you. Have a great evening. Talk soon.